What was also crazy as we transitioned into our first topic for the day is Snapchat. They dropped 30% after hours yesterday when they reported something that was not their Q2 earnings or guidance, because we still have a couple months till that. But they basically said they're not going to hit their Q2 guidance. So at the time about 2 months ago, the company said it expected between 20 and 25% year-over-year revenue growth. They now said, we believe it is now likely that we will report revenue and adjusted EBITDA below the low end of the guidance range we provided for this quarter. So they're not going to hit guidance. They're actually going to get lower than guidance. The market went into a frenzy. Facebook went down 6%. Google went down 4%. Basically, all online media advertising stocks took a hit as a result of Snapchat's guidance. So, Justin, let's start off with you. We don't know the exact reason why they're not going to hit their numbers, but what do you think is the reason for why Snapchat fell so badly?
So an interesting thing is I called a short on Snapchat stock on their IPO. I actually looked pretty extensively at their IPO at 27. It was mid-high 20s per share.
I think it was about 24 in 2017.
Yep. 24 in 2017. And that would have been a really good short for a number of years. It was down peak to trough like 80%. And it's really gotten a COVID beneficiary because I think we all craved, especially the younger generation, really craved sending each other messages. My big thing with Snapchat is I've never touched it with a 10-foot pole, nor will I, because I don't think it's a platform. I think it is you open it when you receive a message, a DM, and it's a DMing platform. And by nature, disappearing messages are basically, disappearing by nature. So you don't go to Snapchat to go discover things. Now they've tried to do that in the discovery feed, and they have these like pseudo stories that are semi-media. Raise your hand, put it in the comments if you even use that. But my generation, meaning folks from 25 to 35, do not use Snapchat anymore. I think it's somewhat used in the kind of maybe the Gen Z cohort. But even then, you don't go to Snapchat to go discover things. Instagram, you kind of go to discover things. And even more so, TikTok is like you go to discover even more things because the discovery is so good. Here on YouTube, discovery is really good. So the more discovery you have, the more addiction you have to come back, and the more of a platform you have. I think Snapchat's on the other end of the spectrum.
Tom, why do you think they dropped so badly?
Because they're trash. I mean, what's the problem? Look, I don't think it's a structural issue with the whole industry. I think digital advertising is going to come out strong regardless of any recessions. Spending on digital advertising is not going to be diminished no matter what happens with this economy. To an extent, I mean, it's going to come down with the entire economy, but it's not a reopening story that's now getting closed because of COVID going away. I think the problem is not macro or industry-wide. The problem is Snap individually. Not all digital advertising business models are built the same. Obviously, you can see with Google, that's not the case. With other providers, with Facebook, that's not the case. They're losing a little bit more ground since the reopening, but I mean, it's very marginal compared to what Snap is going through. The main problem with Snap is just the business don't make no sense. Justin alluded earlier to the structural issues of the platform. I'm not an expert in social media like that, but I'm a numbers guy, and I look at the numbers and I look. It's quite scary to me. Their revenues, quarterly revenues, went 20%, 25% down in Q1 versus Q4 of last year. So they're losing momentum quite severely. So it's a $4 billion revenue business, not really growing anymore. In fact, decelerating. That's trading at $40 billion, and they're losing money. I don't understand how a software as a platform business has 60% gross margin. I mean, it should be 80 for a software business.
And to your point, they have 310 million DAUs, which is 100 million more than Twitter, and they still can't monetize at a hard level.
Well, Justin alluded to why they have these issues. I'm just talking about, I'm completing what Justin said from the financial perspective. I'm just seeing the company has never lost and has never made money. Their net income is about -1 billion for 2019, -1 billion for 2020, and another -500 million this year. So they're losing money. Their margins are strange, 60% gross margins for a software business, and they're decelerating in the growth. They had their -25% growth this quarter, which is quite alarming. Also, I don't know anybody who uses Snapchat for anything besides things we cannot mention on the show.
I do not want to imagine what Tom sends out from his Snapchat.
I don't have an account. I've never had.
Okay.
I've
He has a
Likely
burner.
story.
He definitely has a burner.
Likely
No,
story.
I'm 40 years old. Why would I use Snapchat?
One thing I'll add about Snapchat is I think in a uncertain time, I think that you see a bifurcation. I think ad tech and ad spend will level out through kind of a recession or period of time like this. But the amount of spend that will stay strong is conversion advertising. So Instagram ads, Facebook ads, search ads, things that like, oh, I'm a lawyer, or, you know, I'm selling you a t-shirt or something, whatever. I think the ones that are going to take a hit are, you know, we talked about this with Twitter, are like brand impression, reputation, ad spend. So you're going to see a pullback, especially like that's all there is in Snapchat is like Coca-Cola sponsoring some weird post. Like nobody's buying anything from Snapchat.
That's actually a very good point. And Snapchat, I looked at their presentation deck for their last earnings. Their argument is that they know they can't beat Facebook or Google at conversion ads. So their narrative is like, we have Gen Z from ages 13 to 35, and that is the most impressionable time for a young person to develop their brand affinities. So if they see Coke over Pepsi from 13 to 20, they're probably going to buy more Coke at Thanksgiving versus Pepsi. And that's their argument. The problem is when a recession comes, Coke doesn't need to spend that money. So that's where it drops immediately.
Yeah, and I don't know how effective like seeing Coca-Cola being drank in between nudes is like.
Well,
how effective that is.
That's a valid point. But Amit, I mean, you bring up a very interesting point. I mean, your whole startup is built on the fact that certain industries lack algorithm.
Yes.
And suggested based consumption. That's the big problem. Like TikTok has this caters to the same demographic, but their algorithm is brilliant. It's very addictive. Right. Even for me, if you get them, you can spend hours on TikTok. It goes away like the sands of time. You can't spend hours on Snapchat. There's no algorithm pushing content your way. And I think that's what you were talking about for years. It's the death of non-algorithmic suggested business models. That's why YouTube completely changed for subscription-based feeds to suggested-based feeds. The AI is just too good.
1000%. I mean, and the other thing about Snapchat, it's a social graph of your friends you're getting stories from. If you don't have a lot of friends, they're not going to show you random content, which means creators aren't going to get discovered, and then you won't spend time because there's nothing interesting. Absolutely.